All right, welcome back. Today we have with us one of the most credible sources in our industry, in our niche, the bootstrapping world, Lexi Grant. Thank you for joining us on the pod, Bootstrapping to Billions.
Yeah, good to see you.
So, Lexi, I am a fan of the work. I've been following it for years in terms of the content. They got acquired,
Thank you.
right? For folks that are not, right? Folks on the audience that may be listening and we want to hook them in because it's going to be a phenomenal episode. But why? Why should they listen? What are they going to get out of today's episode? What's the lemon, the juice
Yeah,
worth the squeeze?
we've interviewed more than 300 founders who've sold their business, and hopefully you and I can talk about some of the takeaways from those conversations, the stories we've published.
Love it. And you also have built and exited multiple
Mhm.
businesses as well.
Yep.
So in today's episode, hopefully we can get to the concept of the journey, right? Everything starts somewhere. Definitely interested in terms of where things started for yourself. And then exit one all the way to exit five, exiting the
Mhm.
business, lessons learned, and then 300 interviews later, hopefully the distilled insights. So kicking it off, I mean, Lexi, what kind of got you into this game that is building sustainable, profitable, really media companies for you?
Yeah, my background is in building media companies, and I sold 2 of them. They were smaller exits, and when I went through that process, I felt like I didn't really know what I was doing, and I didn't know how to find the right people to help me. So all of the examples I saw of people selling businesses were like these massive, huge unicorn exits, and that wasn't the situation I was in, and I was like, "Who's out here who's gonna help a smaller founder like me make the most of this?" And that's why I started They Got Acquired, basically to fill that gap.
Yeah, which is like honestly such a close to home, like relatable thing for me. We were like pre-show bantering a little bit. Like one of my earlier exits was to a group that's like a couple towns over from me, and it was not necessarily a good one. I don't tend to talk about it too much because I still work with the
Mhm.
guys and I don't want to, put them on blast. But I had zero experience. I had zero help. I had nobody telling me, what a good thing versus a bad thing was. And then because of that, I got put into a situation making a decision that was probably not the best timely decision to make. And I don't think, yeah, like who else is out there really kind of talking about that other than folks that have lived it? So like going through
Yeah.
the live learned experience from you, like what was that initial story and journey?
Yeah, and I mean, I think that's really common, by the way, because a lot of people are going through this for the first time. Everyone has to go through it, for the first time at least once. And
Yeah.
even, like, a lot of people that read our newsletter are founders who have done it before because they realized, "Oh, now I really want to up my game for the next time." Like, there's always more to learn. So I think that's one of the things that I wanna do is, like, make it accessible and not intimidating
Hmm.
because to many founders, like, we've had our head down building a business, and we're certainly not studying
Hmm.
and then when it comes time to sell your business, there's a huge learning curve. So I think, like, making people realize, like, it's normal to feel like that. And
Yeah.
yes, there are resources that can help you, but, like, that's okay, like, to feel that way as long as you can figure out how to, address it and get where you need to be.
I mean, let's get deeper into this. So it's a function almost of, in some situations, maybe folks just don't know, right? In some situations, maybe folks are a little bit shy or scared or embarrassed, or sometimes we are built to or meant to feel like because we're not one of these Wall Street Journal headline raised $1 billion in funding
Mhm.
or whatever. Like my business isn't good enough or it's too small to even ask. But why do you think that the market itself isn't there necessarily built up to support folks that are building, at the end of the day, still valuable businesses?
Well, doing a deal, like, if you're an advisor, a $5 million deal takes about the same amount of work as a $50 million deal, and, maybe that's different as a scale beyond that, but, like, they're they're incentivized to do the bigger deals, right? And so you've gotta find people who really want to help on the smaller deals, and, like, that is their bread and butter, so you're not the smallest fish in their pond.
Yeah, and it's like a real thing of incentives and markets
Mhm.
kind of ultimately make. And we saw it. We used to see it in the capital market side when we wanted to try to disrupt like affordable and flexible smaller check sizes. It's
Mhm.
the same to a stroke of pen to $1 million check as it is to a 10K
Yep.
check. So why am I going to write the 10? And the
Mhm.
market just doesn't fluctuate there, doesn't focus there
Yep.
and flow. So it's like a system of incentives. How do we disrupt that? So how do we change that? What are the things you're
I mean, I
finding?
do think it's starting to change in the last few years. Like, more people are talking about this, and I hope we're helping to make an impact there too, because there really are, like, lots of people out there growing small bootstrap businesses, but you just don't hear about them as often.
Hmm.
And, that's primarily what we write about on our site. It's we do cover some VC-backed businesses, but I'd say they end up being a small percentage of what we write about, partly because we cover exits under 50 million, and a lot of the VC-backed exits to be like a real win would be bigger than that if you've raised a lot of capital. But yeah, I think it's possible to find the information. You have to just look harder. But those people are out there. And I think knowing like you're not the only one who's doing it this way is just helpful in itself.
Yeah, honestly, it really is. And I'm a fan of the content. I said it earlier into the opening, probably the most credible source. And I really believe that. So I've been following your
Thank you.
newsletter. They got acquired, which we're definitely going to link to the show notes
Thanks.
for a long time. And they're really good, quality, meaningful conversations with folks that oftentimes don't get the platform to have.
Yeah. And I think a lot of like other sources also include a lot of like jargon, and it can be intimidating or hard to understand if you're not like from the finance world, for example. So that's another thing that we try to do, and I hear a lot from founders who appreciate it, who like I had an email yesterday from a guy who was like, "Thank you for breaking this down in a way that
Yeah.
I could actually understand it," because, yeah, it's a lot if you don't come from that world.
What do you think is like the most overwhelming? So when you're having these conversations, what are folks kind of,
I mean, so I talk to a lot of founders who want to sell and, like, help them figure out, like, what is the best approach for them and their business, and often people just don't know how to start at all. Like, they don't really know how to get started or, like, who can help them. I'd say those are the biggest ones. We talk a lot about, like, the best ways to find a buyer for your business,
hmm,
but I think that ends up falling into place once, like, you have the right support systems. Um
everything starts somewhere. I mean, for folks listening that may be on this journey in their later stage, exit 4, exit 5 ready, and
Mhm.
they're thinking about exiting, what is your
Mhm.
recommendation? So learn, live, knowledge. What's the best place to start?
I mean, I'm always happy to do a call with anybody who wants to chat and, like, talk through their best approach, because it's hard to give generalized advice because it really depends
Mhm,
on so much on the business. So it depends on the size of your business. Like, sometimes people will say, "Am I too small to sell?" You can sell any size business,
mhm,
but, what changes is, like, obviously how much you're going to get for that business and the way you can do it. Like, the bigger you get, the more options really open up to you in terms of opportunities for how to sell. So, like, one of the things we do is we match founders with advisors and bankers and brokers who can help them sell.
mhm,
And really, you've got to have at least like 300K in EBITDA to kind of be a fit for most of those folks. So sometimes if founders are running businesses that are smaller than that, we might talk through like, how do you post on a marketplace and sell there? Or how do you pitch buyers yourself? And
mhm,
what does that look like? Um, but, we've done like, we've collected a lot of data on founders that have sold, like, well beyond the 300, stories that we've written,
mhm,
and we broke up, like, how do sellers find their buyers. It ends up being about a third and a third and a third in terms of, mm, a third of them using a broker or advisor, a third the buyer comes to them, and a third they find the buyer through their network.
mhm,
So all of these options are pretty common. I mean, we also hear a lot from people who like weren't thinking about selling and then they got incoming interest from a potential buyer.
mhm,
And like, what do you do then in terms of like, hey, should I explore this opportunity with this one buyer? Or maybe I should think about opening up to like a full process and getting other potential buyers, adding them into the pool. So there's all sorts of different ways you can approach it and different ways that people come to the process.
When you're talking to folks, so you do take calls. You take calls every week,
Mhm.
and you're speaking to folks, not only to do the interviews and put out the content, but to also be able to help and support and make the introductions. What's a typical
Yes.
phone call sound like? What are the typical talking points?
Yeah, so I have a team of reporters who write the story, so they're interviewing founders who have sold. So the people that I talk to are all founders who want to sell. And I usually open it up and just say, "How would you like to use this time?" And sometimes they're, like, super organized and they have a list of questions about their business, and other times they're like, "Well, I just don't really know how to get started. And so I say like, okay, well, tell me a little bit about your business and why you want to sell, and then we can start from there.
And what's
Uh,
that typical answer? So most times, what are
I
you
mean,
hearing?
I've talked to a lot of founders who are really burnt out, and that's why they want to sell. One of our mottos is you should sell before you burn out.
Mhm,
So when you're starting to feel like the inkling of wanting to sell, it's like, okay, maybe accelerate your exploration of that idea, because the actual selling of the business is like a marathon in itself.
mhm.
And you've got to keep running your business while you sell it. And then, many founders also have some sort of earn out period afterwards where you need to perform in order to get the rest of your money. So you've got to have some energy in the tank to finish that up. So I usually say like, okay, if you're starting to feel like you're maybe a little burnout, like now's the time to think about whether this makes sense.
Yeah, I mean, that's a really to me, that's a really real thing, and I would love
Mhm.
to go deeper into it, something that I believe in
Mhm.
a ton and I've seen a ton. I've seen a ton in terms of sellers getting beat up in terms of valuation and terms because
Mhm.
they weren't necessarily exit ready and
Mhm.
because they approached it as an afterthought, reactive,
Mhm.
instead of being proactive into it.
Yes.
So 1,000%
Yeah,
agree
totally.
agree with what you're saying in a lot of
Yeah.
different ways. So if somebody's a little bit burnt out, what's kind of your initial recommendation?
Well, I mean, I talked to a lot of people who are a lot of burnout too.
Mm,
Often people say, "I'm past that." And sometimes they're burnout because the business is not doing well, and that's a challenging spot to be in because those businesses can be hard to sell
mhm,
on top of the founder being burnout. But if you are starting to feel burnout and your business is doing well, I often say, like, it sounds counterintuitive, but sometimes it makes sense to think about selling before you feel ready,
mhm,
because it takes a lot of us, like, a long time to feel ready to do certain things. And with the business, like, often we want to grow it past its maximum point. So, like, if it's still growing, you wanna take advantage of that and continue to help it grow and reap the benefits of that while it's growing. But the truth is that you wanna sell your business while it's still growing. You don't wanna wait till it's plateaued or started to decline. And so if you can sell it while it's still growing, you're gonna get a much better sale multiple, because
mhm.
that's what buyers want. They want buyers that are still growing.
And there's a
And so
reason for
sometimes you have to
that.
think early. Yeah.
There's a reason
Yep.
why buyers want that.
Yes. Well, it indicates past performance, which can also indicate future performance, right? And so, yeah, businesses that have a strong growth trajectory are really appealing to buyers. And so that means like you want to think about selling while you're still growing instead of waiting until you've done everything you can and the business starts to plateau.
Now, I think that a lot of folks tend to okay, here's a question for you off of observations. When I speak to a lot of folks that are bootstrapping or they're SMBs, they don't necessarily want to even talk about an exit. They're like, no, this is the business in which I'm building and I intend to own it for a very long period of time. Talking about exits and valuations, no, that's for the venture folks. That's for the folks that are raising money and they know they're going to sell in 7 years, right? What do you say to somebody who's just getting started and it's like, no, you should probably get exit ready from day one?
I mean, I have a lot of friends like that, and I think it's cool they're so dedicated to what they're building. But first of all, no one wants to run something forever. There's going to become a day where either you get tired of it or you don't want to work anymore, or maybe you want to do something else. So there is going to be an endpoint at some point, and it's hard to see that at the beginning. Usually it comes quicker than we expect. But even if you think this is like my dream, business I want to run forever, you're probably going to need to transition it at some point. And then the
We
other
all
cool thing,
eventually
yeah,
exit.
yeah, exactly.
Whether it's one we want or we don't want, we all
Yes.
eventually exit at some
Yeah.
point.
Yeah, or you might get an incoming offer from somebody and you want the business to be in a good place to sell for as much as you can. But the other cool piece is that almost all the things that you would do to get your business exit ready are the same things that make a business great for you to run personally. So like I'll give some examples. EBITDA is really important to when you go to sell. Like a lot of people think, oh, it's all revenue, like buyers care about revenue. They actually care about your bottom line and your profit. And if you can increase that now, even if you don't want to sell, that means you're going to get to take more money home and you're going to have a bigger paycheck while you continue to own the business. And even if you never sell, you're going to make more money. Another good example is like founder dependency. So I know a founder who wanted to sell her business and she realized that it was too dependent on her. So she spent the next year like trying to get a team and systems in place so that less of the business ran around her. And when she was done with that process, she looked around. She's like, I don't know if I want to sell this anymore because it's so much easier to run the business now and I'm working less and I'm less stressed. it actually benefited her to make those changes even though she was making them for a buyer, and she did end up eventually selling, but I thought that was a really interesting observation that she was like, "Oh, I did this for someone else, but I actually probably should have done it for myself."
Right?
So it's cool that, like, there's all these synergies between, like, doing what's good for a buyer is actually doing what's good for you. The only exception to that, and I think this is really interesting actually, is, like, the growth piece, because buyers want to see a company that's, like, growing year after year after year, and I think especially for, like, bootstrappers, it's not only okay, but, like, not celebrated enough when someone has a business that is consistently doing well year after year after year, but isn't necessarily growing or is only growing 1 or 2% a year. And that, meets it's a lifestyle that we want, and we're still, pocketing a good amount of cash. We're enjoying the work, and, like, you don't have to have that kinda crazy growth to feel fulfilled in running a business. But that growth piece is important if you go to sell. You don't have to have it, but it's gonna help you get a lot more money in the bank.
For sure. I mean, you can always ask the why. You could always look for the why. And it's like, well, why is it not growing? Well, maybe it's a choice. Maybe we're
Mhm,
optimizing
mhm.
around lifestyle and time
Yep.
and all these other constraints that we have to manage. And we're not necessarily optimizing for what the market's allowing us to
Mhm,
do.
mhm.
But consistency over a long period of time to me is equally as strong of an indicator as growth unto itself. What are your
Yep.
thoughts?
Yeah, I mean, for sure, and any business that's been consistent will have buyers lining up for it, even if it doesn't have growth. But adding that growth on is just like a nice extra layer, and I think it's a lot of founders don't realize how important that can be. So if you at least know that it's a factor, then you can, possibly accommodate for it when you're thinking about selling.
Right, but that transferability concept that you spoke about earlier, it's pretty key and it's oftentimes under or overlooked. So it's like you're thinking these things that you have to do. It's almost like I feel like when you're a kid and you're being told to clean your room, and it's like, "Oh, you gotta
Yeah,
clean your room," and it's like, "Oh, this reactive thing, like, now, oh, man, now I have to clean my room." But realistically, if you just keep your room clean, you're kind of living in a nicer space.
yeah,
You can find your toys quicker. You can do what you want. You have all this room for activities to play, right? It's like almost like a nicer place to live. And it's like the same with a business. Like, yeah, you can get to this point in time where you have to get exit ready, and it's this massive amount of work and undertaking to be able to organize and be able to put the right processes in place and documentation to make it transferable and as an asset or like keep it clean, keep it
yeah,
documented, make it transferable from the beginning, and then you can get an operational exit. You don't have to necessarily
mhm.
sell, which is the other thing.
Yeah, I think that's something that, like, a lot of second-time founders do a little differently is, like, they just understand now innately, "Oh, these are a few things that I can do to make my business, like, yeah, cleaner or just more transferable or just more valuable from the beginning." It's yeah, they think about that ahead of time, like,
What
it's
do you
just
think the
part of
top
them.
things are? Like the keep it simple of it.
Well, one is, like, the transferability, but not just operationally, but marketing-wise. Like, you don't want a business to revolve around you, so, like, you're starting a new brand. I mean, this may be too simple for your audience, but, like, you don't start at, like, alexisgrant.com. That is not my URL because, like, that is gonna be hard to transfer later.
Hmm.
So you wanna have a brand that can run without you.
Key
It's a little
person
tricky
list.
because yeah, especially now, like, I think brands that have a face grow faster and people wanna hear from a person, not a brand. So you do also wanna have, like, a face in there, and but I think there's a point where you can sort of transfer the trust from the face into the brand. And so just having a plan for that and knowing that it can be seamless is something to think about from the beginning.
Hmm.
I mean, one other one is thinking of like, if you understand how multiples work, so different types of companies get different sale multiples. So they sell for a different multiple of EBITDA. And these sale multiples are just guides, by the way. They're not like hard and fast rules. But generally speaking, SaaS businesses sell for much higher multiples than agency, e-commerce, media companies. And so if you truly were thinking about like, how do I exit for the most amount of money, you would maybe build a SaaS company because that's and a B2B enterprise SaaS company, because that those are the kinds of companies that are exiting for much higher multiples, and many of them are exit on a revenue multiple instead of an EBITDA multiple, which is unusual for most types of businesses.
And there's reasons for this, right? There's reasons why.
Yes, and actually one of the reasons can be kind of applied to other types of businesses. So SaaS companies typically have recurring revenue. And if you have recurring predictable revenue, buyers like that, just like operators like that. We like that because we know we have money coming in every month. The buyer wants the same thing. And so if you can think about how can I apply that to the media company I'm building or the agency I'm running or the e-commerce company I'm running, that's going to help you get a bigger multiple because you have the recurring revenue. So I think there's like pieces of the SaaS mentality that you can apply that can help you elsewhere.
And I think it's even becoming a bigger, broader market right now with like, vibe coding picking up and the ability to create like a service-based SaaS or a SaaS as a
Mhm,
service to a certain extent and start to productize services, capturing some of that recurring. So it's a very interesting moment in time for sure.
mhm,
But
mhm,
these best practice first principles,
mhm.
always apply. What other things have you picked up from a first principle perspective?
I mean, so we ask every founder who we interview who has sold, what was the biggest challenge during your acquisition? And most of them say due diligence. I think people really underestimate what the due diligence process is going to be like, and they think they have their ducks in a row and they're generally clean. And it ends up being a lot more work than they expect, partly because you while you're running the due diligence process, which can be a full-time job in itself, you have to keep running your business because you don't want the business performance to decline during the acquisition process because the buyer will see that. In fact, if there are ways to like help it lift, improve profitability or improve something, like show that new things are coming along, new opportunities, you sign a new client, that's a good marker to have during the process.
Mhm.
So I think a lot of founders just don't realize how hard this is gonna be. And the ones that do, we see them doing a few things. They might well, if there's 2 co-founders, sometimes one co-founder will continue to run the business and the other one focuses on, the acquisition process. Sometimes solo founders will say, "Okay, how can I, like, delegate more of my job before I start the acquisition process so that someone else is already in the habit of doing more of this work and I have more space and bandwidth to sell the company?" That's another way you can do it. But just I think anticipating that it's gonna be a lot of work, um, is generally smart because, yeah, it's often underestimated.
And there's a why behind that. So that's on the sell side, right? So this is unanticipated workload that's coming on when you're looking to sell your business. And again, if you kept your room clean, probably be a little bit easier maybe, right? But even on the buy side, I think that there's a why around this because on the buy side, you're trying to diligence away risk, right? And I also think that there's an issue in our market. I'll say our market, this micro equity space, right? Bootstrapped SMBs, micro equities on the buy side because the deal size is smaller. So it's kind of nonsensical to invest a ton of money into a deep diligence process, right? Sometimes these diligences could be hundreds of thousands of dollars to truly do a deep diligence, but the deal itself could be a few $100,000 in this space.
Right.
So proportionally, how does that make? So then you're almost assuming there's going to be risk, and then in that assumption of risk, it's almost like, well, it needs to now be passed on. It needs to be passed
Mhm,
on to the seller. But if a seller could proactively ring fence that risk, if the seller could proactively position it for the buyer and say, hey, it doesn't exist,
mhm.
it repositions the whole conversation.
Yeah, for sure, and it also depends on who the buyer is. Different buyers have different risk tolerances and different approaches, whether they're used to due diligence or not.
What are you seeing in terms of buyers on the buy side in this market?
Like, who's buying?
Hmm.
I mean,
And,
it really
and and let's
depends.
almost break it down. Let's break it down from ZERP
Mhm,
to today.
mhm.
Have you seen a
I mean,
change? And what are you seeing as a pattern?
well, so we cover 6, 7, and low 8-figure sales, and it's kind of arbitrary how we chose that window, like, sub $50 million deals because I feel like those are stories no one's telling,
Hmm.
but the truth is, like, someone who's selling for 6 figures is gonna have different buyers and maybe even a different process,
Oh,
especially if you're
for
selling
sure.
for less than $500,000.
Yeah, it's almost like it's like business brokerage space versus investment banking space.
Exactly, and even below business broker space, we serve a lot of those founders too, or smaller than that.
Hmm.
So they may, see more individual buyers, so it's individuals who wanna buy the company. Sometimes there's a lot of PE firms playing in this space, especially if you're at, like, a SaaS with more than 2 million in revenue.
Hmm. Almost like a rise in that right now. Yeah.
Mhm. Yeah, for sure, and then, I mean, there's a lot of roll-ups as well, like, an agency might be holding company might be trying to buy other agencies.
Do you think somebody should buy or build?
What do you like doing?
Right? So let's say for the audience listening, say you got some first time founders, right? And I also want to touch on your personal story too, because you've gone
Mhm,
through, just for like laying credibility's sake as well, gone through this process. You lived this process to be able to then serve the market in which we are.
mhm.
Say you're a first time founder. Do you think that the right course, in this opinion, do you think the right course is to go out and build something or to buy something, and why?
I mean, I love the building process because I feel like you learn so much from it, and it's hard to appreciate how hard it is to go from 0 to 1 unless you've done it. But with that in mind, like, if you can skip the 0 to 1 and buy a business that's already performing, I see the benefit to that because, like, even this business I'm running now, like, I've been doing this for almost 4 years, it's taken a lot longer than I thought to make it work. And, like, I've run other businesses before. I thought it'd be faster. But going from 0 to 1, you never know how long it's gonna take,
Mhm,
right? There's gonna be things you learn around along the way, especially, like, I've had certain things I know I do and don't wanna do after running other businesses. Like, I don't wanna run a services company.
mhm.
So, like, there's things I've said no from the beginning. Can I get a different model to work? And so I think, like, figuring out what your audience wants, yeah, how to get the business to work. Sometimes it takes years, and
Mhm.
so if you do wanna skip that, then, I think buying makes a lot of sense, but I love the beginning phases, like, I think coming up with a brand, like, finding something that resonates, storytelling around the brand, like, to me, that's all the fun stuff.
Yeah, and I mean, you've added the additional challenge of building to suit as well. It's, you have these different you change your perspective, change your approach. Some folks will, it doesn't matter what it is. It just needs to make money. It doesn't matter.
Mhm.
What's on
Yep.
Reddit? Find something, build it, sell it quick, try to, sell it, make it, exit it type of thing. And then you have folks that are intentional and very purpose driven and intentional within the work, and the work then resonates and then it needs to find a model that supports
Mhm.
it. And that's a
Yep.
process. That's a separate type of process. And it's almost on the buy side, you're almost trying to essentially do a little bit both. But in my personal humble opinion, I feel like having that experience, you're taking on a lot of risk. Like, you are taking on a risk when you're going to buy something. And I think it's important to talk about this just because there's a lot of content out there that's like, just go
Mhm.
buy something right now. And
Totally. You know
like,
what? I would
it's not that
Yeah.
easy. Like, it's really just not that easy. And if you haven't built a business and you don't know what it's like and you don't know what you like.
Mhm. Yeah, and if you go through 0 to 1, you also kinda know what some of the common pitfalls are, and you can look for that when you go to buy a business later. Like, you're like, "Oh, well, I could see this as a red flag, or I'm gonna ask him about this because I remember that the first time I did that, that was the hard part for me."
What was that for
Like, I think
you? So when you were building, so let's talk about the first couple companies that you built and exited.
yeah, so I started my career as a journalist,
Hmm.
so I worked at, like, more traditional newspapers. This is, like,
Which is like
when they were a
clear
thing.
connectivity to what you're doing
Yeah.
today too. Yeah,
Yeah.
which is awesome.
Absolutely.
Yeah.
And then I started a content marketing company in 2010, and at the time, we were growing blogs for businesses. This is when, like, businesses didn't really know how to do it themselves, and it was like a little agency, and one of our clients bought my that was the first time I sold the company. One of our clients bought my business, and it was just me and a team of contractors, but we all went in-house at his company. It was called The Penny Hoarder. It
Hmm.
was a personal finance media brand.
Great brand. Yeah.
Yeah. Yeah, so I was the 2nd employee there and got to help kind of build and scale that business. It was also a bootstrap business, so it,
Yeah.
like, really spoke to my ethos, and I got to do a lot of things there that I honestly probably wouldn't have done on my own because we grew very quickly, so I got to help kinda learn how to scale a startup.
Hmm.
Um, so I was there for a number of years, and that eventually sold. That was a bootstrapped exit. That company sold for $100,000,000. It was a crazy outcome for the founder.
Yeah.
He was a really great guy, yeah. Um and then I also had, like, a different kind of exit. So that first one was an acqui-hire
In
where,
a
like
service experience based
Yes,
business.
exactly, where I was, like he bought me and my team, and he wanted to bring us in-house to do the same thing for that company that we had done for our clients. So, like, we let go of all of our clients, they didn't even matter to him. He just wanted us, our processes, and also, like, our larger, network of freelancers to service his company. Um, the second sale I had was more of an asset sale, so and this is smaller too, it was a website for writers. It was like a mid six-figure sale, and it'd always been a side project, so basically, when I ran the content agency, because we were growing blogs for businesses, I was like, why don't we just like apply our systems to our own asset so that we get to benefit from the upside of
Yeah,
that?
do it for
And so
yourself and
that's
then do it for others. Yeah.
yes, so that's what we did. We just treated it like a client and grew this site about writing
It was like a little
over the
incubator.
years.
Yeah.
Yeah, and then yeah, we used it as test for a lot of the sites
That's
that
awesome.
we other sites we ran. Yeah, it was fun. And then anyways, when I was at the penny hoarder, it was a very busy time for me. It's when I had my 2 kids, things were kinda nuts, and, like, I wasn't working on the side project at all during that time. I had an editor who was running the site, and we just wanted to make sure it was, like, making enough money to pay her
Mhm.
and, like, keep growing.
Mhm.
And so when I left the penny hoarder, I, like, picked that site up again, and I was like, "Do I wanna work on this?" I kind of played around with its SEO for a while because I could see a lot of things. I had learned a lot
Mhm.
about that, and I thought, "How can I apply it to that site?" And after working on it for, like, 9 months, I realized, "You know what? This is, like, who I was 10 years ago. I don't really wanna do this anymore." So I sold that site as well. So I got to go through the process again, and it was different this time because I had multiple people who were interested. I had multiple bidders. I got to kinda run a bidding process. But even then, I was not plugged into, like, the community, the M&A community that I am in
Yeah, it didn't
now. So
really
I still
exist.
felt
Yeah.
like yeah, like, if I had known about it, I may have worked with, like, an advisor or something. I don't even know who to ask about that.
Mhm.
And anyways, so I once I finished that went through that sale, this was also, like, around the time of the pandemic, so I was, like, home with little kids, had plenty of time to think about, like, what do I wanna do
Yeah.
next? And that led me to where I am now.
So, like, that's awesome, first of
Thanks.
all. Like, such an
Thanks.
organic story. And for the audience listening, it's, like, very close to home with Entrepreneurship talking about buy versus build. We suggest, like, go get a job, get somebody to pay you, get experience, take all that
Mhm,
experience, some of that pay, go build something on the side, get your asset to match
mhm,
the income, and then go level up, do it, get your freedom to decide what's next. And it's like what you almost pretty much did to a certain extent,
mhm.
and it paid off. And you're literally building an asset. So you were building an asset, even though it was generating enough, like you said, to compensate the person that was operating it, which is awesome because it's amazing. Like
Mhm.
most folks will never ever be able to achieve that. It's like a major milestone. It's an operation, but you're also building equity and you have an asset now for yourself, and then you're able to get back into it.
Yeah, I'm glad that it ended up that way because there were definitely days where, like, because I wasn't working on this site almost not at all, but occasionally there'd be, like, an issue that I have to deal with or something, and I was like, "Oh my god, I don't have time to do this." I was, like, helping run a fast-growing company. I had 2 babies, and it was a lot.
It's a
But then
challenge for
I'm
sure.
later that, like, it worked out well because, my family benefited financially from that, even though it was a small sale, and I think that's another, like,
So,
piece of these, yes, is like having mid six-figure sales, people kinda poo-poo this,
mhm,
but, like, if you've bootstrapped a business and you get to keep all the money that comes from your sale other than, like, paying a professional or taxes or whatever,
mhm,
like,
yeah.
that's meaningful, and, like, if you especially if you do that early in your career and you have a couple of those and you invest that money, like, that adds up, like, you don't need one of these, like, mega exits to be financially, secure.
It could put you in
So
a
I just think
position of
it's
a freedom to
yeah,
decide, which is a very
exactly.
powerful place to be, for sure, on a lot of different levels. Yeah, that's so awesome. You mentioned asset based, and
Mhm.
you kinda, like, plugged it in for a second, but for the audience, if they may not know, like, what do you mean by asset based sale?
So you can probably explain this better than I can, but I think an asset sale is I handed over. I explained it that way because I handed the asset over to them.
Mm,
Where like instead of like it was, we had all the processes and the systems in place that like I could just hand this playbook and the site, which was an asset, and like all of its other pieces to the new owner, and I didn't have to go with them at all.
mhm.
So
Quite
that's kind of
literally
what
an
I think of
asset,
it.
yeah, and then, I
Yeah,
mean,
it
for
was a
folks listening, you typically in our market, you will sell you'll have an asset-based exit, which is typically gonna be different than selling your stock or your equity or whatever that's gonna be, and they have different implications, and you could design appropriately, but you experienced that. Yeah, that's amazing, and then you went through this and you lived the experience, so now it's COVID, so you had just what and I apologize, was the exit it was right around it was 2019, 2020.
the writing site.
Yeah.
Um, 20, I think it was early 2021.
So through this exit, then you had experienced it, and quite literally, you had
Mhm,
just lived this. You have just experienced this. It's very real, and then
mhm.
that's the origin of they got acquired,
Yeah, both of those experiences, and also just like, yeah, I watching the penny hoarder sell and
which is amazing.
seeing
Yeah,
that,
it's such an
that
awesome
wasn't like
story for our
yeah,
ecosystem.
and that founder didn't want the publicity, so maybe that's a piece of this, but, it wasn't like you didn't hear about that everywhere. And like that's the kind of win that founders should be having. Like, those kinds of founders often put more money in the bank than a VC-backed founder, but it's just you don't hear about it.
Yeah, for sure. And like we could talk about that too, right? Right. You go, you raise a ton of capital and you see the headlines, but what you don't see is the preferences.
Mhm. Mhm.
And then somebody
Yeah.
goes and invests 7 years of their life building something and it's a zombie startup, and then they're, forced to exit or whatever the case is, and they walk away with nothing because of those preferences,
Yeah.
even if
Now, I
it's
mean,
50 million or whatever.
yeah, that's one of the things that we really try to share a lot. We just had a webinar with Sharon Gillenwater, who sold a SaaS for 25 million, and she's been, like, super transparent about, like, talking through exactly how much she took home and where all that money went. She ended up with 13 million before taxes, and about 9 million after taxes. But I thought it was cool that she shared that story because, like, we don't hear these real numbers, and there's a lot of assumptions that are made. And, I mean, I think another thing that gets overlooked is, like, often bootstrap founders are not paying themselves as much as a VC-backed founder might along the way. So not always, but sometimes VC-backed founders are getting a bigger paycheck, like, as they're building the company,
Depends how
while
you
the
build.
bootstrapper
Yeah.
yes, while the bootstrapper sometimes has to make more sacrifices, but they might get a bigger payout at the end. Like, there's not one way to do this, and I think that's, like, what gets missed is, like, Silicon Valley kinda sells us this one playbook, and the truth is there's other ways to do it that can work just as well or better depending on what you want.
Yeah, and seriously, I genuinely believe that if you do wanna go venture, because you need capital. At the end of the day, you can't be capital constrained, right? Like businesses, you need the lifeblood. Like, you need the cash flow,
Mhm,
you need the capital, like, it needs to
mhm,
get things going. So, it's not don't ever raise or access capital, but do it smart and hopefully make good timely decisions when you do. But realistically, if you could sell it, make it exit, if you could bootstrap something, get it profitable. I feel like almost like a stipulation for certain types of businesses. I think that there's asterisks of things that need, you know, that are very
mhm.
capex heavy that should
Yep.
raise early.
Yes.
But I feel like for a lot of entrepreneurs, a lot of investors, a lot of bootstrappers, a lot of people that are going out trying to build something, it's like get something like get some traction. And I feel like in the market we've lived in since ZERP, it's like that's gone out of the window. Like
Mm,
everyone's looking at every deal like it's Facebook, like it's Meta,
mhm.
and they're
Right.
Zuckerberg.
Yep.
And it's like, oh, you're just raised. Here's 2 mil. And I
Mhm.
just feel like for the founders, for the entrepreneurs, for the folks that are first time or maybe they've lived it before, it's just like do yourself a favor before you take that check. Maybe like underrate the deal and what it's going to look like for you in 5 years
Mhm.
or 7 years. And if you hit a different milestone, you could. I also think on the investor side, on the capital side, I feel like there's this kind of stigma in market of if you have a checkbook, like a pen and a checkbook, then maybe you have all this wisdom and everything, and you know better.
Mhm.
But
Mhm.
really, you just know how to write a check. I think like you could easily convince somebody who's early or new or novice
Mhm.
to take money. And if you're just getting started and somebody offers you $500,000 or $1 million, you're like, wow, I must have such a great idea. I'm going all in.
Yeah. When does that happen?
And and it's sending you these messages almost like, and then next thing you know, you look up and it's 7 years later and you
Mhm.
haven't seen the investor
Right.
in a little bit. They're on to the
Well,
next
we
one.
we do write a lot about a lot of sales, like, we just had one story, for example, where we interviewed a founder who, they raised 6 million, and we know they've sold for 7 figures. We don't know the exact number, but you can guess that it might have sold for around the same amount that they raised.
Hmm.
And, in those cases, not always, but typically, the money goes back to the investors
Hmm.
first, and the founder might not give much, or if anything. So, like, we're always trying to, like, because I wanna celebrate all sales as a win in some way, because I really think it is. Like, if you've built something that someone else wants to buy, like, it really is a win in some way, no matter even if you didn't walk away with that much, right? You've done something great, and you can use that to leverage for the
It's
next
a
thing.
milestone to celebrate for
Yeah,
sure.
it really is. But, like, I also wanna, you know, even that out in a story by saying, like, explaining, like, "Hey," and typically, you know, kinda putting some context around it, because this founder might say, "Oh, we sold for 7 figures," and, like, it's like this, looks like this easy success story. In reality, well, actually, they raised $6 million, and they might not have walked away with anything. So, like, how do we kind of also explain that in the story without, you
Making
know
it feel bad, Yeah, but you
Exactly.
wanna explain, like, yeah, you raise capital, you get preferences, and if you don't
Mhm.
return, you're gonna return a certain amount to your investors, and if you don't meet these thresholds, then you walk away with nothing. It doesn't matter
Yeah,
how much
and that
time
wasn't
you
obvious to me before, like, I, studied this stuff.
which
So I think
I don't think
yeah,
the market in general, to be perfectly honest, I don't think there was a lot of coverage at all. I think you've done a ton. Like, I think that you've done a
thanks.
ton for our ecosystem. I think that you've done a ton for our market. I think that you've done a ton to shed light. And it's like amazingly awesome to witness and watch, especially over the last 4 years, close to 5 years, this kind of shift that we've been seeing. Like it is
Mhm.
starting to become more known and celebrated, and there's more awareness. And today you're running a service where you're working and you're interviewing folks that are going through this process, and you're taking this experience of past conversations and past experience and learn lessons, and then you're helping connect them with the appropriate type of advisor. Like how do you work that process today?
Yeah, so, yeah, one of the main ways that we help founders is when a founder wants to sell, say, in the next year, we'll match you with an advisor, a broker, or banker who is a good fit for you and your business. Because I hear from a lot of founders who say, "Oh, yeah, I met a broker, who worked on a yoga studio down the street," and really, you want someone who has sold the type of business that you're selling,
I'm
like, who has
building a B2B
experience
SaaS.
selling. Yes. Yes, because, like, they understand the SaaS landscape, the SaaS buyers, the SaaS multiples, and so that's what we do is we know who the players are in the space, and because we've interviewed so many founders on their experiences, we've heard the goods and the bads about a lot of the different bankers and brokers and advisors, and we can help you figure out a lot of people don't know the difference between those things,
Mhm.
and we can kinda help you figure out what it is and what exactly you need for your business.
And you touched on it earlier, like you had mentioned three different types of buyers
Mhm.
in market, a third, and a third. And the reality is the market's still not, even though it's progressing, and there is becoming more coverage and it's becoming more mainstream to a certain extent, especially like right now the whole concept of buying a business is super mainstream, but just in general, like bootstrapping is becoming more of a celebrated thing. There's yet to be really a more mature market, and the function of a market, how markets get made, is still inefficient. I would say that the private market in general is inefficient. The micro equity market is still hyper inefficient, maybe a little bit more so in that smaller gap that you were mentioning earlier for like a marketplace deal. Relationships matter.
Mhm.
And when you're working with folks, you're working with folks that have deep rooted relationships within a specific niche industry. What do you think are like the best sources? What do you think are the best sources of deal flow? Let's talk about like on the buy side. What do you think is the
Mm.
best sources of deal flow?
You know what? I get a ton of emails from buyers who, because they know I talk to founders and they're like, "Who are you talking to?" And we actually tried for a while to have a product for buyers, but I think it could have worked, but I just realized, like, and you and I were talking about before the call, like, I basically want this to be a lifestyle business. I kinda hate that word, but I do care about my life more than my work at this point. I
I
have 2
mean,
kids.
realistically, we build businesses to support our life, right?
Exactly. And, like, one of the things I realized was, like, we can't do everything, and so we ended up cutting that product to focus on other things we were doing. But, yeah, for a while, we were sending out, like, with obviously the founder's approval, to a small list of people, like, here are some off-market founders who are looking to sell.
Mhm.
But, like, besides that, we don't really serve buyers, so I don't really know the answer to your question. A lot of buyers are doing tons of cold outreach, and I hear that from founders, and I get those emails myself. It was like, "Looking to buy a business like yours."
Mhm.
But, like, yeah, I think that's, like, one of the most interesting parts of maybe the market not being mature is, like, this, like, influx of, like, almost like spam to all to
Yeah.
people who are growing businesses around, like, "I'm interested in buying," and, most of those folks, they may truly be interested in buying, but, like, perhaps not your business. They actually know nothing about your business, and they're just, like, putting out feelers to see if you'll bite.
Yeah.
So, usually, I say to those founders, like, if you're getting those if you're thinking, like, you may wanna sell, you really should run a full process, and, like, they're trying to get in the door before to run a full process. Like, they want to get you interested in selling to them before you know what you're doing.
Yeah.
So, I mean, I think that's a smart approach from a buyer's perspective, but yeah,
Yeah, but
I
for
mean
the business owner, for the seller, it can be extremely harmful because this is
mhm,
an individual that is running a business, building a business, was not thinking about exiting a business, received this solicitation, an idea was planted,
Mhm.
And then off of that first flag, it's almost like a whole perspective could be shaped.
Well, I think also, like, gets them really hopeful, and then what happens to a lot of founders who follow through on those is, like, they do a call with them, and it turns out they're not in their ideal sweet spot at all, like and because really the people who are doing a lot of this outreach, they just finding people who run businesses, they don't really know anything about how much money you're making or whatever. So, like, I think it's a lot can be a lot of disappointment or a lot of wasted time.
Mhm.
But in the best case scenario, I like to see founders see, okay, we have whether it's like one of those outreach or it's like a legit because we also see plenty of sellers sell to someone who reached out to them and it's someone legit who wants to buy the business. That happens all the time. And I like to see sellers use that as impetus to like get a professional to help them run a full process, like get other potential buyers into the pool, give yourself some leverage, like
Mhm.
use competition, drive up the sale price, all these things.
Mhm.
So if it can be like a starting point for that, I think that's kind of the best case scenario
Yeah, and
for
actually
the this.
kickstart something the right way. Approach it, good data in, good data out type of thing. Approach it the right way. Now, you talk to a lot of folks that have exited,
Mhm.
and exiting is a beginning, right? Do you ever get into conversations about the challenges that folks go through post exit?
A little bit, but I think this is also undercovered and we could probably do more here. We have a few kind of columns that people have written for us on this topic, but the truth is that most founders don't think that much about it until they're at the finish line because like selling the business is such requires so much energy that, like, they often don't do kind of the soul searching around, like, "What's next for me?" until they're done, and then it's like a whiplash effect.
Mhm.
So, yeah, I mean, certainly hear from a lot of founders who are, like, feeling lost, like, I call it the lost phase, like, "What do I do now? My
Mhm.
business was me.
Mhm.
How do I reinvent myself?" So, the as much as you can, like, doing some putting some thought into that ahead of time will do you good, but, yeah, we don't see enough founders doing that.
Yeah, I think that that's really honestly like a pretty addressable market, and yeah, I don't think that there's a lot of coverage or support, and
Yeah, it's hard though because that's not what the founders want at that point. They want to sell their business. Like there's a few that are smart enough to say, "You know what? I want to prepare for this next phase now." But most people are looking at like what is a problem right in front of them. It's kind of like it kind of reminds me of like I also think not enough founders like talk to wealth managers before they sell.
Mhm.
But they're kind of like they just wanna get through the sale and then deal with that as a next step,
Mhm.
and it doesn't seem like the most pressing problem, when in reality, they actually should be talking to those people early,
Mhm.
but it's not what they want, and, like, it's one of those things where you can't sell someone something they don't want, right?
Yeah, even if it's in
So
their
it's
best
hard.
interest, yeah.
Yeah.
It's like medicine versus medicine versus the painkiller type of thing.
Mhm.
Now,
Mhm.
you've built media companies, you've been in the world, you've been in the space for a very long period of time, excelling at it. What do you think is like the special sauce around building a
Man.
a great media company?
Well, I think the special sauce is having, like, a personality, but it's so different now than it was in the even 5 years ago. Like,
How so?
it's amazing. Every day, I mean, so, like, all the things that used to work to build a media company basically don't work
Like
anymore.
what?
Like, I mean, this is and it's funny because these are the things I always consider myself really good at. Like,
Mhm.
building an audience was kind of my sweet spot for many years, right? But, like, SEO isn't what it used to be.
Mm-mm.
AI has really disrupted the space heavily.
Mhm.
All of these social channels that used to be good organically really aren't anymore. Like, the newsletter space is still interesting, and I think that's still an opportunity, but I believe that that's also gonna get disrupted in the next few years.
What do you see the disruption being?
Well, I think it's still reliant, like, everyone says, "Oh, you should own your newsletter instead of, like, if you have those emails, you have control over them instead of, like, posting on Facebook where, like, you don't have direct access to those people and your
Influence of the
access can be."
algorithm, yeah.
Yes. But, I mean, we're also beholden if you have a newsletter, you're beholden to the platforms there too. Gmail could make one change
Mhm.
and, you know, our lists become less valuable. They
Mhm.
already just recently added in, like, a manager subscriptions tab, which I think is great.
I saw
But
that,
I think
yeah.
there's gonna be, like, much bigger pieces of that. Like or for example, like, some people talk about how, um say Gmail just starts giving you I mean, they already do some AI summaries. Say they give you an AI summary of your inbox instead of like, you don't actually have to read the email. You
So you're
just
not
see the
clicking
AI
in.
summary. Exactly. Like, I think it's just so fickle right now. Uh, Almost all the people who are growing big media companies now are doing it just by throwing tons of money at paid ads,
Mm,
like paid social
mhm,
ads. That's, like, one of the only ways to reliably grow now, and it's expensive. You gotta be really willing to invest a lot of money into it.
mhm.
There's a couple exceptions to that, and those are the people that kind of everyone follows online, but the truth is for most people, it's gotten much harder to grow an audience.
Where's the bootstrapper live? Yeah.
Yeah, I mean, that's the hard part. Like, but on the contrary, I feel like so for brands, this is where the buying comes into play. Like, I think right now is like a really golden time for brands and like product companies to buy
Media
media
companies?
companies
Mhm,
because it's so much harder to start from scratch now that if you can buy an audience that's like follows someone because they really like the content or it's a loyal
mhm.
audience and it matches they're the type of people that you want to sell to, I think that's the best way to um, get a hold of a high quality audience now rather than building it from scratch. So that's a place where I would buy, not build. If media isn't your primary thing, if it's like you're selling a product or you have some other way of monetizing
Mhm.
and you just need the audience to monetize it too, that's where I would buy.
Yeah, you have a mechanism for cash conversion, it makes sense.
Yeah.
Now, you said earlier that key person risk is a real thing, and a lot of folks do, they just hit social, and they'll start
Mhm.
to put out content, and it's almost like you build yourself into a problem by doing
Mhm.
that.
Yep.
What's the solution? So earlier you said, "Hey, I think we found some potential ways to back out of it." Like, what are your suggestions so when you're seeing folks that are exposed to that?
With like branding, you mean?
Mhm.
A branding key
Yeah.
risk? Well, it's hard. You wanna have both because I think you do wanna have that person because it builds trust and people wanna follow people. But I think you can associate it with your brand. Like, you can see how can you over time transfer trust into the brand. Once your brand is big enough, you can bring other people into that branding piece and, like, then slowly transfer the trust to them. So, like, we've seen some media companies sell where there was a person who was key to the marketing, not to the operations, but she was key to the
Mm,
marketing, and usually that's a risk for a buyer that would decrease a sale price, right?
mhm,
But some buyers are willing to take that risk where they either have the person sign on for a while,
mhm.
but more importantly, they have a transition plan where they're gonna get someone else they're gonna slowly transition so that someone else takes that spot. Because you do really want a person. But the brand's gotta be big enough that it gives you some leeway to transfer the trust between the brand and various different people.
And support it.
It's definitely tricky.
Yeah, it is. I mean, it really is. I think it's a legitimate problem that a lot of folks need to overcome and probably a solution and market that somebody needs to disrupt. You see a lot of folks low hanging fruit going to socials. It creates the potential of the key persona risk. You see platforms popping up like Beehive, et cetera, making it easier to launch a newsletter. AI complements that, and now it's easier to just create content and just pop up newsletters. So then you're seeing a bubble in that market because then it's how do you differentiate yourself against the million and one newsletters out there when the quality is going down and folks are now disincentivized to even open unless you have that known brand, which is a good case study for acquisition in that situation. You have these things taking place. So larger corporations with budget or larger companies with budget applying it towards ads and paid, which could be amplification of personal content or syndication of existing content or just paid in general, which is then driving up prices for paid, which is then outpacing and outpricing your typical bootstrapper who's trying to get into the channel to be able to acquire
Yep.
customers in a reasonable
Yep.
way. So it's almost like customer acquisition in this new
Yeah.
age is becoming
Absolutely.
this huge, huge, huge problem to solve for. Where does it go? Where do you think?
Yeah, I think of it as audience growth for media companies, but you're right, for a lot of companies, it's customer acquisition.
Mhm,
I mean, I still think you can win with quality.
mhm,
Like, you see all these AI newsletters popping up, but they're curating and, like I think it's smart what they're doing, how they're, like, curating what's already out there, but remember, someone still has to create the original content.
mhm,
Like, they're just pulling from what someone else has already created.
mhm.
If you can create something original that's helpful to people, that and it has to be something no one else is doing. Like, and it doesn't have to be the topic doesn't have to be something no one else is doing, but the way you do it has to be something else that someone can't get somewhere else. That's the only reason they're going to open it.
Mhm.
And like you said, it's getting harder and harder to do that. But I do think it's possible. I mean, I'll give you a good example of someone I'm watching. There's a SaaS that I use called Mega Hit, and
Yeah.
it's an audience enrichment. It's made by like basically an indie hacker, and it takes your email list
Mhm.
and enriches it with LinkedIn profiles and locations of the people on the list.
Real
And I mean, if you're
problem.
in a hu yeah,
Yes.
if you're in a HubSpot or something, it's already doing it for you, but if you're smaller, you could use this thing called Megahit. Anyways, he just started a newsletter, and it's been really interesting, and I don't think he's a writer at, like, heart, but he's done a great job with this newsletter. He's basically saying, like, "Here's how you can use your newsletter list to, create events," and, like, including ideas of, like, how people are using his tool to facilitate this. But my point is, like, it's really niche, content that he's putting out through a newsletter that and I live in this space, and I'm like, "Wow, this content is really good." Like, I'm not getting this from anywhere else. Like, and he only puts it out every few weeks or something. But it keeps me I mean, I use this tool anyways pretty regularly, but it keeps him top of mind. And I think that's a great example of what we would have called content marketing, where, like, how can you just be super useful to your specific group of people?
I feel like used in the right way as well, it becomes a tool for the founder. So just not
Mhm.
just a tool to acquire customers. So again, like going back to the clean your room, not something that you have to do. But if it becomes something that you really kind of want to do and then you have to hold yourself accountable to do for your audience consistently, maybe on a cadence or something, it forces you to really create quality content for your ICP, which forces you to think about your ICP. And it's just like a great mechanism to kind of refine thought. And it almost
Yeah,
becomes
and
a
there's other
tool.
benefits too, like meeting other people in the space. You might create relationships from doing a podcast or whatever. There's, like, other, side benefits, I think, but it is expensive and time consuming, or one or the other.
Yeah.
Expensive or time consuming to whether you're doing it yourself, right?
Yeah.
To create content and grow an audience like that, but
Yeah.
I still think it's, like, the one of the best ways to grow a
I
company.
think it's been one of the most rewarding things that I've done over the past several years. So we did a buy in public. So we went out and we acquired newsletters. This was like right when
Uh,
Beehive was popping up, and because I thought it was a super interesting value proposition of content and then solving the problem of sponsorship and creating the in group ad network. And then there is like a model that could be, from a unit economics perspective, modeled and you could potentially underwrite deals. And I was like, oh, this is cool. And they were putting out numbers and stuff like that. So I was like, oh, let's see if we could prove this concept. So we did like a buy in public and we acquired newsletters. And then we went through the integration process of having to integrate those newsletters into the Simple Profits newsletter. And this was like years ago now. So we
uh-huh.
are 300 and I think 52 weekly issues in. At
Mhm.
first, it was a daily as I was going through the buy in public and the integration. So I had to like change the audience perspective, which
Mm.
buying an audience and then assuming that audience is a huge challenge. And you're seeing
Yeah,
a
depending on
huge
what if you
drop
wanna
off in
change
churn. And
yeah, if you wanna change what they're getting or
so that was a challenge to go through. So we like sent daily to try to create
Mhm,
like this story and this journey of it. And then we
mhm.
shifted once we stopped acquisitions. We shifted and we did a poll and we said, well, what should the cadence be? And we started running polls every week, and we were trying to get people we have really great engagement. There's like thousands of votes into these polls.
That's cool, yeah.
And then we shifted to the weekly, and then it's been a weekly, so yeah, like we're 350. And it's been something that I've like personally committed to every week, and it's been one of the best things I feel like in terms of fulfillment, which is such a small
Mhm.
thing, like a small
Yeah,
little simple bet. But yeah, I think for a lot of reasons, there's a lot of benefits like what we just discovered,
yeah.
again, from like
I mean,
personal.
I love writing our newsletter. Like, someone else kinda puts the framework of it together for me, but I still work on pieces of it myself, and it's fun.
I like the accountability behind
So,
it.
yeah,
Like the function of it, it has to be, and then you put yourself out there publicly, and it's like you gotta show up for it, and then
yeah.
you build an audience and you really do get people. I think it's so cool when people like respond back or you put up a poll and people are engaging. And like I'm not an influencer, I have like zero. So I was never on social. Like I was off social. Go
Mhm,
on Facebook. Like zero social following. So I never got that dopamine hit. I never got that experience of
mm.
like what it's like to have an audience. And then I did this and I'm seeing these people engage. with polls and feedback, and they're responding to new like the sends with emails, and I'm just like, "Oh, this is so cool." You're like seeing something take shape. It's like, yeah, it's super cool. Where do you think things are going to go? So we are where we are today. Skate to where the puck's going to be over the next 3 years. What do you think that the future beholds
For
for
media or for
media?
selling? I mean, I don't think too much will change in 3 years. I mean, it is changing, but I don't think, like, it'll all be over in 2 years. Let me put it that way, but I do think, like, if you extend out a little bit beyond that, the way that I and many other people have made money online just isn't gonna work anymore, and, we're seeing that already. I think there's, like, an opportunity to stretch it out for another 3 years, maybe longer. Beyond that, like, I think we all have to kind of reinvent.
So let's reinvent. What does that look like? So the future of monetization of media, what do you think it looks like?
Well, what I'm most excited about is, like, and if I had to, like, if I left what I was doing now and wanted start a new job or something like that, I would love to work for, like, a brand that already has monetization nailed. They're selling something already, and they wanna grow their audience to buy
Mm,
that. Like, that's where I think the most opportunity for people with my skills lies because the monetization is figured out. Then all I have to do is be helpful to people.
mhm,
But in terms of, like, just media companies that don't have that, like, that's almost in my mind, that's like a content marketing or it's like a media arm of a brand, and, like, more and more of these are popping up, right? It's, like,
channel
becoming more and more
distribution.
common. Yes. Um, but for media companies where media is their product, that's where I think it gets harder. I mean, there's still money in sponsorships or advertising or whatever you wanna call it. But it does mean like, I think it's gonna get we were kind of alluding to this earlier, but I think it's getting harder and harder for the new little guy. And I mean, there's still new brands popping up, people who have money, who could put lots of money into paid acquisition. But I think if you're starting small without that money, it's hard. Like, you have to have something really unique in order to get traction now.
Mhm,
And it's just about experimenting with new things, like how okay, what works now for, I can't use Twitter anymore for audience acquisition, like, maybe I try TikTok, and, like, I feel like this is when I kinda date myself because I'm like, I like trying some new tools, but I don't wanna be, like I do not wanna be on social media anymore and, like, trying all the new social tools, so, like, that's just not even interesting to me. So it's like it's gotta be the game of someone who is open to, like, doing lots of these experiments.
mhm,
Because you gotta try something, and, like, all the brands that have grown well over the last few years, they all found something that worked in that period of time, right? There's, like, some brands that did, like, paid arbitrage with, like for media companies, or there's, like people talk about the Hustle, I think they were the ones who did, like, a recommendation or Morning Brew, they had their recommendation. They were like they used that tactic when it had just started and it worked. So it's, like, all about trying the new thing and finding the thing that is gonna work, and I mean, I don't even know what those things are. Like, we do little experience where they got acquired, so I'm doing this a little bit here and there. Like, for example, we just started doing webinars, which is an old idea, but
making a
it's
resurgence, yeah.
yeah, and I used to do these, like, 10 years ago, and now we're bringing it back, and they actually work really well because people wanna see things live
It's kinda
now, like, in
authentic.
person.
It's like in a world
Yeah,
of everything being fake.
yeah, and also it's like, I think if you can offer something, like, there's not really a lot of places to get information like what we share, like, how do you hear from a founder who sold a business about their, like, honest, real take on it? Like, people aren't talking about this in most places, and we can create a place to do that. So I think that comes back to, like, the unique thing that you can share. But, yeah, I think to answer your question, it's just about innovating and trying new things and, like, being open to the experiments.
Yeah, I mean, exactly what you're doing. You're creating value with your content, and then you've been able to figure out a model that monetizes that through pure value creation by just
Mhm.
helping people solving problems.
Mhm.
The most
Yep.
authentic of senses. Where do you think the exit marketplace is gonna be going? Where do you think the world of micro
I love
equity?
these I mean, I think, like you said, it's gonna become more and more popular to do it this way. Like, people start to recognize, "Oh, like, I don't have to have a massive exit to, uh, for it to be celebrated and for it to be meaningful for my
Life
family."
changing, yeah.
Like, I think that's just gonna become more and more apparent. And it seems already like I feel like bootstrapping is kind of getting harder now, like, people are starting to realize the downsides of raising a lot of money. So, yeah, I like where that trend's going.
Yeah, hopefully it com yeah, hopefully the work in which you're doing helps continue that
Yeah,
trend on the upward trajectory.
visibility.
for sure. Lexi, you just invested over an hour with us on today's podcast. If anybody's listening at this point, it's definitely like the Glengarry of Glengarry audience members. They are so totally into this. What would be the best place for them to go to be able to
Yeah, I
connect with
mean,
you?
sign up with our newsletter. It's at theygotakquired.com. You'll see it at the top of the page. That's the best place to start because it's all free. You can hear how other founders sold their business. I post on LinkedIn once in a while. LinkedIn's not liking me right now, so I gotta get back
I
into
loved
it,
your
but
LinkedIn content.
no, thanks. That's a good place to also follow kind of some of the things I hear. I try to, like, repurpose them into actionable insights for people on LinkedIn. Yeah, and then if you want an advisor or a broker or a banker or just wanna honestly, if you just need help figuring out, like, the best approach for your business, you can email me. I'm at alexis@theygotakquired.com.
Dig it. And we'll put all of that in the show notes for sure. Definitely in contact. Lexi, appreciate you joining us today. Trust the process, commit to the journey.
Thanks for asking
That's
great
the pod.
questions.